we're really trying to find these builders land in which the seller may not be extremely motivated today, but they understand if they're patient and they kind of form a JV, a joint venture with the builder, 3 years from now, there could be a big upside for both parties, right? And so it's a win-win because the builder can develop at such a minimal cost up front, if they don't have to pay for the land. And in the meantime, the owner is truly maximizing the value of that land because they're going to get paid, much more in 2 years if they can be patient. And not all sellers are in that situation, but some of them are. It takes a savvy and a sophisticated landowner to do that kind of deal. And we've seen them, I've structured them in a couple different ways. The first way is pretty straightforward. I'll give you some examples. I'll pay you $500,000 for this lot today, or I'll give you $600,000 for it in a year or 18 months or 2 years when we're done building, right? This is just for a single family infill lot. Or you could give us the land and then you get the first 500,000 and then we split the proceeds, 70-30, 60-40, right? So there's even more upside, but there's even more risk to the landowner. Those are some kind of creative ways that we're, getting deals done in this marketplace that are win-win situations, and especially tying into, the land stuff that we're doing.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network CREPN Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Bishoy Habib. He's a highly experienced real estate and business attorney with over 12 years of legal practice in Florida and New York. And he is successfully represented prominent developers, investors, and financial institutions in more than 1,000 transactions totaling $12 billion. And in just a minute, we're going to speak with Bishoy Habib about creative deal structuring. But first, a quick reminder, if you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Bishoy Habib. Welcome to CREPN Radio.
Thank you. Thank you, Darren. I appreciate you having me on. Thanks for the nice intro, and I'm excited to be on the show.
I'm looking forward to our conversation, but before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Yeah, absolutely. So, I kind of grew up in a immigrant household, and so my dad started doing real estate when I was a kid, and so the rest of my family's all in the medical field. I remember seeing my dad make his own hours, kind of do his own thing, and was still doing well. He was still successful, and so I think I was drawn to real estate at a young age. And so I decided to go to law school because the job market was tough when I graduated in 2009 from undergrad. And so I went to law school. I took all the real estate courses they offered. I always knew I wanted to be in real estate. I got out of law school. The job market was still tough. So I was like, well, let me practice law. So I went up to New York, lived up there for a few years, got licensed in New York. I was already licensed in Florida as an attorney, practiced up there, got some amazing experience working with big time developers, especially focused on hospitality deals, hotel deals in Manhattan, doing all kinds of big transactions up there. after a couple of years, I liked it, but there was a fork in the road. And what everyone figured out during COVID in terms of the cost of living and the quality of life and all that, I figured out maybe in 2015. So I decided to come back down to Florida, for family reasons and for the reasons just the quality of life. And I've kind of been down here ever since. I've done ton of real estate transactions, ton of business transactions. You touched on that in the intro. And so after doing it for other people for 10 or 11 years, a year ago, I opened up my own law firm. We just turned 1 year last month. And so it's called Legacy Legal. And so I focus on real estate. I focus on business. We have a litigation department, and I also focus on estate planning as well. That's where I am today. In addition to that, I'm also a real estate broker. So I have a real estate brokerage here, Capstar Real Estate, based in Tampa Bay, Florida, where I am. And we have about 20 agents under the brokerage now, and we focus on off-market stuff, creative financing. We do have retail as well, but I like the more fun stuff.
Cool. So you're both an attorney and a real estate broker.
Yes, sir.
Gotcha. And do you invest as well? Are you an investor?
Yeah, so we actually have a third company. It's a Capstar investment. And so it's me and my two business partners. We also co-own the brokerage as well as the investment company. And we got a team of, I think it's 12 right now, full-time employees, based in Costa Rica. We're actually flying out there tomorrow morning to have a 4-day company annual meeting basically with them. So, and we find all kinds of off-market deals all over the country. So all three kind of avenues there.
Got it. And as an attorney, is there any particular asset class that you work in more often?
I have a ton of residential experience, so that's pretty easy for me when people reach out to me about that. I personally prefer the commercial real estate. I wouldn't say there's a specific asset class. It's pretty agnostic. So funny tidbit about me, my senior year of law school, my senior semester, I worked full time at Marcus and Millichap. So I was a full-time student, full-time MBA, full-time law student, full-time MBA student, full-time employee of Marcus and Millichap. I worked in multifamily here in Tampa. It's about 6 months, and then I had to stop to take my bar exam. So, multifamily is always fun. Getting a lot more industrial right now. I've done some self-storage. The thing I haven't done is the data centers. That's what I want to get into a little bit. I've been hearing a lot about those. I haven't done one of those deals myself. So that's probably one of the few things I haven't done. But other than that, I mean, I'm pretty agnostic. Do a ton of office.
Gotcha. And as far as your in your portfolio, is there an asset class you guys focus on in investing?
We have done, we have on the investment side, we have kind of found more creative and more progressive ways of finding land for developers and builders. And so we've really honed our efforts in on that recently. We'd like to think we're modernizing the way that builders and developers find land. In the old days, historically, and especially pre-internet, it was all driving for dollars. You're driving around, you're shaking hands, you're meeting with owners. That worked in the 80s and 90s and maybe even the 2000s, but that's just not the way the world works anymore. That's not to say you can't do that and have deals fall in place, but it's not the most efficient way to do business. And what we found is that there's extreme inefficiencies in the marketplace when it comes to these big time builders, these big time developers. I mean, builders that you know and I know, right? And everybody that's listening to this show knows, they're just very backwards. They just still do things the way they did them 30, 40 years ago because that's worked for them. So what we're doing and focusing on is modernizing the way that happens. So that's through technology, that's through AI, that's through, not just going out and shaking hands, but reaching out to sellers, finding off market listings in more creative ways. And I think the name of the game is efficiency. So, we've teamed up with several local regional developers here, our Capstar investment company, to kind of provide them with off market opportunities. The goal would be to branch that out to a national level. Right now, we're we're focused in Florida. We have the capability to go national, but we're focused here. And so that's the project I'm most excited about. That's kind of where we've geared not all of our attention, but a good amount of it recently.
Got it. So let's talk a little bit about some creative deals. You talk about the old way of doing it versus kind of the technology and just kind of the current way of doing it. What give me an example of some creative or creative ways that you're either making, finding, doing deals. What give me some
Yeah,
ideas on what you're doing.
absolutely. So we have builders, and the building has in some areas slowed down and development has slowed down quite a bit in the past couple of years. The reason being, the biggest reason I should say, is they can't pencil in the deals, right? The biggest reason they can't pencil in the deals is because of the interest rates, because they're double and more than double what they were in 2021. And other, expenses have gone up, insurance, things have just gone up in price. So the deals just don't make sense. It's a numbers game. If you can find a way to bring a builder a deal where they don't have to put any money up, that deal is going to make a lot more sense to them. There's a lot more wiggle room. And so what we've done is, as an example, and kind of piggybacking off the land finding that we're doing, is we're really trying to find these builders land in which the seller may not be extremely motivated today, but they understand, if they're patient and they kind of form a JV, a joint venture with the builder, 3 years from now, there could be a big upside for both parties, right? And so it's a win-win because the builder can develop at such a minimal cost up front, if they don't have to pay for the land. And in the meantime, the owner is truly maximizing the value of that land because they're going to get paid, much more in 2 years if they can be patient. And not all sellers are in that situation, but some of them are. It takes a savvy and a sophisticated landowner to do that kind of deal. And we've seen them, I've structured them in a couple different ways. The first way is pretty straightforward. I'll give you some examples. I'll pay you 500,000 for this lot today, or I'll give you 600,000 for it in a year or 18 months or 2 years when we're done building, right? This is just for a single family infill lot. Or you could give us the land and then you get the first 500,000 and then we split the proceeds, 70-30, 60-40, right? So there's even more upside, but there's even more risk to the landowner. Those are some kind of creative ways that we're, getting deals done in this marketplace that are win-win situations, and especially tying into, the land stuff that we're doing.
Yeah, no, I could see that being a win-win. And like I said, there's risk, but it seems like it would be a fairly known risk. I mean, the worst case scenario, you end up with a property, a developed property. But I guess if the market turns and there's no buyers and all that, that's that is the risk, but you still have the property developed there.
But and that's the important of having a good attorney review it, because the biggest thing when I do these JV agreements is what happens if the property doesn't or can't sell in X amount of time, a year, 2 years, right? What happens? Who has the control? Who has the right to say, I don't care, we're selling it, we're slashing the price, we need to cash out? Who needs the money more? Who's in control? Those are the big questions with the JV agreements, and that's why it's extremely important to negotiate all that on the front end.
Yeah. No, it definitely. I think one of the things that drew me to real estate was just the ability to be creative as the buyer and seller are willing to be.
Yeah.
There's the traditional market where there's the there's the listing site, and there's the brokers list on there, and the buyers look on there, and everything's pretty ordinary and express. But then when you get to the off market and kind of are able to ask and find what the interests are of the seller and or potential seller, maybe like I said, if they're not really in a position they hadn't expressed an interest to sell yet, there's a lot of wiggle room in there, and the creativity is kind of it's limited by your imagination. I mean, as far as what you can put together and stuff. And
Mm-hmm.
so that's cool. The approach that you've got there. Um, and I'm assuming, just like you were expressing there, that the what makes it work right now is the challenge of capital, the cost of capital. Is
Yeah.
that kind of what you're seeing?
That's everyone's challenge right now.
Yeah.
Everybody in any business, any industry, but I mean, obviously real estate, right? Because your margins are just so tight. You have, and especially think about it, if you're a builder, you're not you're not building for, I mean, depends on what you're building, but I mean, generally speaking, if you're building multifamily, you got to think about what the market's going to look like in 5 years from now. Or if you're building tract housing, you got to think about a lot more than just what the next 6 months or 1 year looks like. And that's why builders, they make a lot of money, but they carry a lot of risk, because there's just macroeconomical issues that they just have no control over, right? Nobody has any control over who gets elected. When does the Fed cut the interest rate? What happens with insurance rates? I mean, we have no control over those things, and we have no way to determine where they go. So it's all risk.
Yeah. No, that's true. So in these the deals that you are putting together though, where you have like a land and a landowner and a developer, is that structured? Do you do like is it a joint venture? Did you say? Is that
Yeah, that's typically how we'll do it. So, in terms of a structure, what we see most often and pretty much the most fair way to do it is, we'll form a special purpose entity, an SPE, and which title will be transferred to that SPE. And then if it's an LLC, for example, we'll create the operating agreement, which is the main document that governs kind of the relationship of the parties. And in that, it'll more or less, what it'll say is like the builder is the manager of the LLC, that they can kind of call the shots, right? That the property owner really doesn't have any rights, except that they get, however the pay structure is. So they get the first, like I said, 500,000, and then whatever the waterfall is. And then obviously just certain things to make sure that the developer is, working in good faith and doing everything they can to get this project done, not stalling, not sitting on it. And then, of course, we put, precautions in place, and measures in place to protect, if I represent the landowner, to protect the landowner.
got it? And as far as like the uh, spectrum of creative deals. Do you find that it's pretty much around the financing? I mean, is it, the kind of how, the two parties can come together? Is there anything outside of that? I mean, I'm thinking like, you know, um, I was just trying to think of what other options or is there a broader spectrum of creative deals?
I mean, you could get creative in any way you want. We, I guess typically when I say a creative deal, typically it has to do with something with the financing, but I mean, it doesn't necessarily have to be relating to financing. So, um, we do, in my legal practice and on the investment side, we kind of work with some foreclosure stuff, some short sale stuff. And so when we talk about a creative deal, for example, we might, prepare a land trust, right? Because there are certain rules and regulations in place, that you can't sell a property after so long. But if it's the same owner, which is the land trust, we could then get creative, use that land trust, and then that land trust continues to be the owner, even though inside that land trust, things may go on in there in terms of transferring a beneficial interest. So that's not a financial thing. That's more so just kind of how do we get creative to find a solution, regardless of the nature of the issue.
Gotcha. So, and I guess even towards the nature of the issue, I was just sitting there thinking that like, if I mean, land is a specific deal. I wouldn't think land would present itself as a challenge other than the fact that just like you've talked, the market being what it is, just the cost for the developer and that. But thinking beyond kind of the land stuff, I would think that whether it be a seller that's in distress, whether it be um, a property that's in disrepair or they're out of capital or they don't have they can't meet finance obligations or something like that. Do you ever run into anything like that as far as opportunities?
All day, all day. So we're at a very weird time right now. Anyone who's tracking the market knows that interest rates are extremely high. Stock market is at an all-time high, but yet people are as nervous as they've ever been. People have the highest credit card debt in history. People have the highest auto loan defaults in history. Uh, it's inflation is they're saying it's getting lower, but it doesn't feel like it's getting lower. And what this means is, in my opinion, they're trying to paint the rosy picture, but that's not really what's happening. And we are seeing, and we have been seeing for over a year and a half now, a serious rise in defaults and terms of residential real estate. The commercial real estate is a whole different beast, right? I could talk about that for days, but you're just saying like the average person in terms of their financial inability to keep up with the home. All these people got, cheap debt in 2020, 2021, maybe bought homes that were a little bit out of their range. And now if they've been laid off or if they are making less money or whatever the case is, but we're seeing a lot of these people in distress. The pre-foreclosures, we attack pre-foreclosures on the investment side. We're getting a lot of inquiries on that. We're doing short sales. I wasn't around the last short sale boom. I was like in college, and so I didn't really get a chance to experience it and benefit from it, but I'm very well aware of it. I just finished my first short sale as an attorney last week, right? So that was cool. That was fun. It was a 6-month process. Um, we're absolutely seeing an influx in those kind of properties. And the thing is, if you bought in 2020 and 2021, you were looking good for a while and you might have a 3% rate, but now, the home prices I'm in Tampa Bay. I mean, our home prices are down 20, 30% from their peak in some areas, obviously depending on where you are and what you have. So even if you went up a little bit, you went down a little bit. And so you can't sell it on the market. You're going to have to take a haircut. You stop making payments. And so it's definitely, we're at a kind of a breaking point here, I feel. And so we're absolutely seeing more distress than we've seen in 15 years. I keep telling my clients, my legal clients, I keep telling my clients on the brokerage side, I keep telling my agents, I keep telling anyone who will listen, today is the best opportunity to buy real estate, at least in Florida, in 15 years. And on the commercial side, nationally, this is the best opportunity to buy commercial real estate on a national level in 15 years. I mean, I don't want to say it's a once in a generation, but it might be a once in a generation opportunity, especially if you're buying something like office. But the opportunities are there. The distress is absolutely there. People are feeling the burn and people are panicked. And I don't think that's going to go away until rates start coming down, which probably won't happen until at least after the election. They're saying September. We'll see. But we're in a state of panic right now in terms of the economy in the country, and people are absolutely scared right now, and people are in a world of hurt.
So let's talk a little bit about that. The one thing I think that I've kind of woken up to here in the last, I don't know, 5 or 6 years is understanding that one of the real, um, I don't know, the thing that used to drive me crazy is the thing that makes the market work, and it's the volatility of the market.
Yep.
Because it's what attracts people to the U.S. economy is the opportunity to make money. But in that same regard, there's the opportunity to lose money. And when you have these boom bust cycles, you hope you're on the winning side of that more often than not. But there is a fair amount of pain, like we're talking. Um, you mentioned the short sale you just did. Have you had the opportunity to deal, or do you have any clients working on some commercial properties? Is there, can you describe some of the deals you're seeing if you are?
Yeah. So part of our business model on the investment side is to attack these distressed commercial assets. There's a lot of dry powder on the sideline right now waiting. They have been waiting for these opportunities for years. So I think the name of the game is you're not going to compete with these big hedge funds that have billions of dollars to throw. But as the everyday investor like yourself or myself, you're probably going to need to find a sweet spot of, smaller properties, big enough to make sense, but small enough that like the big guys don't care about it. There was a lot of talk about the office conversions into multifamily. I think that proved to be more difficult than, it sounded good in theory, but I think there's only been a handful of those done in the country. To my knowledge, I think it's just structurally, it's very difficult and it's just cost prohibitive. Um, there's opportunities. Multifamily is, I mean, where multifamily was in Tampa 3 years ago was the most insane thing I've ever seen in my life, in my short, 15-year career, let's call it. Um, there was the whisper prices where you didn't even, there was no list price. It was a whisper price. So you just had to guess what the asset was valued at. And, they were at 2 and 3 caps and they still needed renovations. And deposits were going hard day one. You had to put $500,000 down hard just to get a due diligence on the property. From that point till this point, and that's just 2 years ago we're talking. That wasn't 20 years ago. I mean, it's incredible. You can actually come to a real common sense deal on a property. So we're seeing some multifamily trade. Um, Listen, when you go from uh, boom to bust, and I really like the way you just put that. That's a very good kind of way to think about it. But when you go from boom to bust so quickly as we have, and I'm not saying bust like the market's dead, but obviously we're in a different market now so quickly, there's always going to be friction between sellers who are living in the past and buyers who are more so in the present and obviously want to beat up on pricing. And so there's always a big disconnect, always. And there was for about a year and a half. And I think sellers in all asset classes coming back down to earth, right? They're finally coming to the point where they're like, okay, this is the new reality. This cap rate is no good because the interest rate is double what the cap rate was, right? Or I think it is. So we're definitely coming down to earth. I'm seeing multifamily trade. Um, the flex space, the industrial space, that's still as hot as ever, at least down here. There's always a big need for that. There's still people moving down here. So I would just say that, the multifamily is really the one that I've seen trading the most. And then, like I mentioned earlier, the data centers are hot right now. I just want to learn a little bit more about those and get my hands on those. I think that's a big part of the future.
Yeah. No, I don't see data centers going away. Uh, I mean, I think how much of life is incumbent on, the ability to connect via the internet and all the data that we store in that. It's pretty crazy. Um, so in the different types of distress, I mean, it sounds like, you know, especially like you're saying, the multifamily and office and all that's kind of happening. Um, do you have any kind of uh, a sense of, well, I guess I'm just trying to think like the financing, because I know a lot of commercial real estates, the financing has kind of a length of 5 to 10 years before it has to reset, kind of thing. Is there any
Yeah.
kind of a sense of that in that there's a maturation of the debt that's coming due that's going to wreak havoc or
Absolutely.
increase the opportunity?
Absolutely. So what you're touching on is the exact issue with the commercial. I call it the CDCs, the commercial debt crisis. It's something that I've studied in depth. Personally, I'm extremely fascinated by it. The loans that, so as you stated, commercial debt typically matures in 3, 5, 7, or 10 years, right? That's it. You're not getting 30-year loans on commercial debt. That's just not how it works. So all the debt that was, all the properties that were acquired or refinanced, but especially acquired in 2020, 2021 at 3%, they're coming due, whether they came due already, whether they're coming due in a year or two. And let's just say you bought a multifamily in 2020, you paid, or 2021, you paid a premium, okay? You got it at a ridiculous rate at 3%. Insurance when you bought it was probably 60% of what it is today, or 50%, right? It's probably at least doubled depending on where you are. Um, And on top of that, rents have gone down, right? Rents have gone down because there's been an oversupply. And so, and that's the way multifamily works, right? It's like always like 5 years behind because they got to define the sites and build the sites and, all that takes time. So developers are constantly behind, right? And so when supply is short, they start building and they just have to hope 5 years from now that demand is still there. So I'm looking at deals right. I'm getting deals coming across my desk right now where these operators bought in 2020 at a crazy cap rate at that time that they could justify in that moment, but there was no foresight of what happens when interest rates, if they go up. What happens if they triple? What happens if they go up, 250%? What happens if insurance rates double? What happens if rents go down? What happens if occupancy goes down? And all of those things have happened. And so their NOI might have been one number when they bought it, and now that NOI is 60% of what it was, right? And there's more inventory on the marketplace. And so what does that do to the valuations? And so it's like you're seeing like the most extreme, nobody thought we could go from that to this in 2 years, but everything that could possibly negatively impact, and I keep picking on multifamily because it's very easy to understand, everything that could have hurt that asset class, and again, I'm in Florida, so it's especially bad here, has hurt that asset class. It doesn't mean it's a bad asset class. It just means that now when you have to refi at 7% or 8%, you're not making money. You might be losing money, right? So now you have to figure out, what do we do? Do we sell it, take a haircut? Do we bite the bullet and, hope that rents will go up in a couple of years? I mean, what do you do? You're stuck. And so some people have given the keys back. That's not happened very much, I'll say, but that has happened in places like San Francisco and Chicago. They're just handing the keys back. Those are extreme cases. We're not seeing that in Florida. But you're seeing sellers who are desperate. You are seeing sellers who are going to take a haircut on deals they just bought 3 or 4 years ago, and so that's the risk of getting excited and jumping into a hot market, especially when you probably didn't plan. I mean, I had worked very closely with a lot of conservative people who had been in the marketplace, very smart people, and they just couldn't pencil a deal in 2020 because the deals were so crazy, or 21. And I worked with syndications, and I worked with, big groups that were like, this is crazy. We can't. And as much as they wanted to get in on the action, they couldn't because they stayed disciplined. And now you see why, because now they're finding these same deals. So it's a big crisis. And I'll also say that the federal government has come out and put out regulations and requirements that these banks negotiate loan modifications in good faith. And we're calling it pretend and extend. So you give them an extra year, maybe on the same terms, and it's kind of like a freebie. Like, all right, like we'll give you another year so you could breathe, and maybe the rates will come down and we can figure something out. So, I mean, what you're asking me is like $1 trillion question. And it's happening. I don't think we've seen the dominoes fall like we want, but there's a very high rate of default among commercial property and among commercial debt in the United States, and especially in sectors like like the office market. And so we'll see how those pan out. We'll see what happens with rates. We'll see what happens with the work from home phenomenon that's killed office space. We'll see what happens with all that, but it's absolutely been brewing for, I would say, 2 years now. This is something that, a lot of people smarter than me had seen coming.
Yeah, no doubt. Hey, Bishoy, if we could, I'd like to shift gears here for a second. By day, I'm an insurance broker. And as such, I work with my clients to assess risk and determine what to do with the risk. And there's three strategies we typically consider. We first look to see if we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, we look to see if we can transfer the risk. And that's what an insurance policy is. And as such, I like to ask my guests if they can look at their own situation. It could be your clients, investors, the Fed, legal climate, whatever it is that you identify and consider to be the biggest risk. And again, for clarification, while I'm an insurance broker, I'm not necessarily looking for an insurance-related answer. And so if you're willing, I'd like to ask you, Bishoy Habib, what is the biggest risk?
I think risk is a dirty word. and I don't think it should be, because I think that obviously it has a negative connotation, but I tell my clients all the time that and I deal with business people, right? That I like dealing with sophisticated parties like yourself and kind of people who can, you know, are a little bit more aggressive. That's just the nature of business people, calculated risk. And that's the name of the game. I always tell them, anything we do is going to be a risk. Any investment you make is going to be a risk. Anytime you place money, anytime you buy a property, anytime you partner with someone, there's going to be risk. How much can you stomach? What's the potential return? What's the potential downside, right? So I love that you asked that question, because that's a topic that comes up and a conversation that comes up with me and my clients. And then I always have to ask them, what risk are you willing to take? How much do you love this deal? If you want me to negotiate it more aggressively because you don't care, it's less risk to you, but you probably don't get the deal, versus the other way around. So risk is something I deal with every day as in all my kind of positions, but especially as an attorney. But I'll give you a good, kind of a high level answer. I think the biggest risk is not taking a risk. I do. I think that the times that I've wanted to do something, whether it's in a personal or professional capacity, and I've decided that I don't want to put myself out there, or I don't want to, embarrass myself, or I don't want to take that risk and lose this money. A lot of times I've kind of regretted that. And so those are the lessons that I've learned, is like, you know what, just go for it, just do it. And it was the same concept when I opened up my own businesses last year. I mean, it did take me 10 years to get to that point, to build up that confidence. But I tell you what, within a month, I knew that that was the right decision for me. It was the best decision I ever made from a career perspective, is to open up my own practice as an attorney. It's risk, right? You just got to take that chance. But the people, in my opinion, who never succeed are the people who never take that risk, the people who never put themselves out there. So to me, the biggest risk is not taking a risk. I always tell, whoever will listen, it's like, you calculate, you think about it, but I will feel 100 times better trying and not succeeding and just knowing, okay, well, this wasn't for me, or how do I get better and get to the goal, versus just thinking about it in the back of my head, like, man, should I have done that? I should have done that, right? So that's the biggest risk to me.
Awesome. Hey, Bishoy, where can the listeners go if they'd like to learn more or connect with you?
So I am law firm's name is Levacy Legal. So you can always go to my website, levacylegal.com. If you're on Instagram, TikTok, it's at Attorney Bishoy. That's attorney spelled out, Bishoy, Bishoy. I have a YouTube channel. I'm on LinkedIn. I'm active on there as well, Bishoy M. Habib. And then the phone number, if you want to reach me, is 813-553-2699. I don't know who calls anymore. Probably find me on socials and the website and whatnot. But in case, you still have a landline and you want to call me, let me know.
All right. Well, Bishoy Habib, I can't say thanks enough for taking the time to talk today. I've enjoyed our talk, learned a lot, and look forward to doing it again soon.
Thank you, Darren. I appreciate you, man. It's been a pleasure, and looking forward to next time.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.